So thank you so much for joining us today. There's a lot of people already here. A lot of our investors are still getting in through the check-in room. So really want to thank you all. It's a very big audience. We have people already here from Europe, from the East Coast and West Coast, and we're looking forward to a great day. I'm Matthew Lemerle. I'm one of the managing partners of Blockchain Co-Investors. And today we'll be covering investment themes in blockchain. And just to be clear, this is a very focused full day event. And our goal is not to remind you or to teach you about blockchain and why it's such an important phenomenon. Instead, we are very focused on the investment strategies that the world's best investors are using as they deploy capital in this space. So the purpose of today is, presuming for a moment that you are an investor, the purpose for today is to load you up with the investment themes, the investment strategies, the tactics that the world's best investors are using as they deploy capital into and ahead of blockchain. Today we have a very full agenda. We have more than a dozen of the world's leading general partners of high-performing blockchain venture funds joining us through a series of armchair chats and panels. And that will occur both almost straight away this morning in about an hour, but later on today as well. As Asia opens up, we'll be closing out the day with Asia's leading blockchain general partners joining us. We have complemented that with talks from CEOs of leading blockchain enterprises and digitalized Web3 projects. And we're very fortunate today that we will, in fact, have some of the leading and best known CEOs in their fields and project leaders in their fields sharing their perspectives. We'll also have an update from the Blockchain Association on what's happening in the US around about midday today. So that's the shape of the agenda. I have some other housekeeping matters just to share with you. You are very welcome to ask questions. Please use the Q&A section of the Zoom chat. Because we're recording every segment, we will not do live Q&A in the sense we won't interrupt a panel or a moderated event for a question, but at the end of each segment, we will try and pick up whatever questions you've been asking. And we'll do our best throughout the day to answer your questions. So just be patient with us. If you ask a question at the beginning of a section, we may not get to it for 20 or 30 minutes. Second piece of housekeeping, as I've already noted, everything is recorded. So if you want to share it with friends, you're welcome to do so. And that brings me to a third housekeeping point. This is an open public event all day long, and we'll remind you of that several times today. It does mean that this is not investment advice. As a fund manager, we cannot give investment advice on a specific and open webinar. What we can do, and what we will be doing, is sharing investment strategies, investment directions, and tactics. But for you as investors, this is an educational webinar, and it's imperative upon yourselves to do whatever due diligence you think you need to do before you decide what investment strategies you personally will use. We will not be soliciting for any specific funds or investment vehicles, and no one will do that during the course of today. A couple of other bits of housekeeping, and then we'll get started with the content of the day. Throughout today, we will ask some polls of you. We would very much appreciate if you would take the poll. It won't take you more than a second, but it allows us not only to shape the content. We learned a lot last year when we did this event through the polls, and we fine-tuned today's agenda in light of what you told us. And during those polls, the last one that will pop up, I think 3 times today, gives you the opportunity to express who you would like to speak to more in the coming weeks and months. So when that comes up, you'll have the opportunity to indicate if you want to have a personal interaction or group interaction with one of the speakers. And we highly recommend that you take the advantage of filling that out. If you're an investor, it gives you the opportunity to have direct communication after today's event. So I think I've covered off most of the housekeeping events, housekeeping articles. And so without further ado, I'm going to invite up right now Alison Davis, my managing partner and colleague in the founding of Blockchain Co-Investors. Alison has just joined us, and she's going to spend 10 minutes or so giving sort of the genesis story of why we got involved in blockchain and some of the investment strategies we've been using. So Alison, the floor is yours, and you've got a full 10 or more minutes, so please go to it. I'll turn off my video.
Great. Good morning, everyone, and thanks for joining us. I'm looking at who's on the call, and many of you know us very well, but there are also a lot of new investors. So we thought we would just take a few minutes at the beginning of today and talk about, how we came to form our firm, Blockchain Co-Investors. And in particular on the topic of investment strategies in blockchain, why we created the firm to be a great way to invest in the space. So, Matthew and I spent the first 15 years of our career working in strategy firms, McKinsey, and then Carney in the financial services sector. We worked for a lot of the big banks, payments companies, insurance companies, asset management firms on issues of strategy and operations and risk management and global expansion. And so we understand legacy financial services very well. And when we, in 2013, when we started to meet with a lot of the sort of early blockchain entrepreneurs, we realized what an absolutely critical and important technological breakthrough blockchain was, and started investing significantly our own money in the space. So after sort of early consulting career, from 2000 onwards, the internet came, and Matthew and I moved out of consulting. We both had executive careers. Matthew worked at Gap, helping them sort of digitize, all of Gap and move to an internet economy. I was the chief financial officer at BGI, which is now BlackRock, helping us launch all of the iShares products. And then I moved into running a private equity firm that invested in banks globally. Banks, and then increasingly with the internet, new technologies supporting banks. And Matthew moved into investing in early stage technologies and helping some of the world's largest companies leverage, the internet, build their website, build their digital content, etc. So in 2013, we started to see this wave of incredibly smart, bright, excited entrepreneurs come through trying to raise money for what they considered an incredibly important breakthrough that allows really the reinvention of everything to do with value. And as many of you, it was hard to get our minds around at first. I think we had about 30 meetings before it clicked and we sort of were on board with this whole theme. And as I said, we started investing our own money increasingly into this space. But there was a lot of interest from people who know us, colleagues, friends, family. A lot of people wanted to know, how do we invest in this sector? And, we started to have people invest alongside us. And then in 2016, we decided to really build an institutional quality platform so that everybody could invest intelligently in this space. So how do you invest intelligently in in blockchain, just the same way as in any early stage technology, you have to be enormously diversified. I think we all know that in public equities, you need about 40 companies in your portfolio to have diversification. In early stage technology, you need a lot more than that. The best venture capitalists in the world will tell you that, in any one of their funds where they might have 30, 40 investments, there are 3 or 4 companies that will drive nearly all of the return for that fund. There's a very large portion, maybe 50, 60% of companies will be worth very little. And then a lot of others that are sort of, maybe return capital or 1 times capital or something like that. And these are the best firms in the world at early stage investing. So Matthew and I understood that, having done a lot of early stage investing ourselves and having run investment firms and having worked with the world's best investment management firms. And we decided for ourselves to partner with the absolute best specialist venture capital firms in the world, give them our money to invest, and then through them get access to absolutely the best quality opportunities in the space. And that's what we did. That's what we did early on. We were the first checks in some cases with the early generation of venture capital firms that set up to invest in this space. Several of them you'll be hearing from today. We got to know them. We came to admire them enormously. We, have supported them as they've grown their firms. And through them, we get access to great deals. And they are doing a lot of the heavy lift to really get to know the best entrepreneurs, the best technologists, and really what's going on in this rapidly moving space. So when we launched our institutional platform, we have a very similar approach. We partner with the absolute best venture capital firms in the space. We have about 40 now that we work with globally, half of them in the US, about a quarter in Europe, and about a quarter in Asia. We're in all of their funds, and through them we have positions in about 1,500 of the best blockchain-based companies and projects globally. So we truly have a very high quality index of the best blockchain opportunities. We invest over time. So in early stage investing, you can't just sort of invest in 1 year and hope that you'll capture the great unicorns of the age. You have to sort of steadily invest through the development of the technology. And we feel incredibly privileged to be part of this ecosystem. We value our partnerships. We try to be very helpful to the venture firms we work with. And then when they have emerging unicorns or companies in their portfolios that are emerging as the leaders in the space, and they get excited about those companies, then our team also leans in and tries to help them with finding new executive team members, finding board members, helping flush through their strategy, joining their boards, and helping them find accounting firms to do public company readiness if they're eyeing IPO. And as a result, we also have the opportunity to come in directly on the cap tables of those emerging unicorns. So one of our investment strategies is a later stage growth fund where we come in directly to the opportunities. But we think we've built a great platform. It's built for institutional quality. We have a great team. With one single check, you can access hundreds of the best opportunities in this space, globally diversified, and we're very excited about our returns to date. So that's just a quick snapshot of how we came to start the firm. Since 2018, we've been investing money on behalf of all of you, and we all love it. We're very excited about it, and we plan to do it for a long time. We think this is the early innings of very important development in our global digital economy, which is to digitize all things of value. And there is enormous value creation that will happen as a result of that, and also enormous value destruction for legacy players who aren't able to lean in and leverage these technologies to reinvent their business models. So I hope that was helpful. The rest of the day is, focused on investment themes and strategies in the blockchain space. And I think we've got a great day for you. Thanks very much.
Thank you very much, Alison. And I'm just going to say a couple more things, and then we're going to get straight into the first substantive section of content, which our partner, Mitch Mashigian, will deliver. Just before I do that, let me also explain why the screen has been saying BlockTalk AI. We are blockchain co-investors, but we felt that uncensored, high-quality blockchain insight and news is something that the world needs more of. We, as an industry, have lived through a long period of disinformation and the spreading of confusion about our space, the value it delivers, the at-scale examples of use cases that are quite remarkable. And yet the mainstream press has made it pretty clear that this is an industry that they find difficult to get their hands around. And I would say most of the mainstream press has been rather negative about this important innovation. So we created something called BlockTalk AI. It is exactly what it says. It is a daily news show that talks about blockchain, and it is 100% artificial intelligence created, produced, and distributed. And I'll explain just for 1 second what that actually means. Some of you may find this interesting. We have an AI agent that is continuously scraping the entire internet for news about blockchain. That AI agent provides that information on a continuous basis to another AI agent that writes a script. And every day, a script is written for 15 minutes or less of content. We have voice cloned the team that you'll hear from today. Alison, myself, Mitch, Joy, Topher have all been voice cloned, and they deliver that content with no human intervention. And finally, an AI agent then publishes that to Spotify and to Apple Podcast. That show has been going on for 150 episodes. You may not be aware of that. It's free, it's every day, and in 15 minutes or less, you can get uncensored global breaking news about blockchain and the leading companies, the leading projects, and what they're doing. I listen to it every day. I learn something from the AIs every day, and it is relatively free of opinions. I don't always agree with what the AI says, even if it sounds like me, but I highly recommend it to all of you. Unfortunately, if you read the mainstream press, you don't get that much information about blockchain, and you certainly don't get the sort of real-time information that good investors need. And so BlockTalk AI is a free resource. You can get it from Spotify or Apple every day, and I hope that you will take up that offer. And that's why we've named this event BlockTalk AI, as sort of a capstone event. We're a little old-fashioned because we've got human beings all through today speaking and sharing their insights with you, whereas BlockTalk AI is 100% AI, is censor-free, and it's just the world's blockchain news delivered to you in real time every day. All right. The next thing I'm going to do, and then Mitch will be up, is I'm going to conduct a first poll. Thank you. We've got a very large audience with us now. Please take a moment. It's a very simple poll. Kim, if you would pop it up now, please. We simply want to know why you're here. Why are you interested in blockchain investing? And it's a multiple choice question. Honestly, this should take you no time at all. If you take it now, you'll see the results in real time, and you as an audience will understand who else is here alongside you and what they're interested in. So please do take this. I know, as always, It's hard to get 100% of our audience to take any poll we show them. I know some of you may be driving, some of you may be on mobile devices, so we appreciate it's not always easy to take a poll. But having said that, we've got a very large audience and we've only got 30 people who have answered it so far. So if a few more people would take it. One of the things I learned about statistical significance is we don't need that many to be able to say that we've got a high degree of statistical certainty. And so you can see the results. All of the above is winning. So that basically means that most of you, or the largest segment of you, are here because you believe the technology will enable the transformation of finance. That's obviously our investment thesis. Mitch will talk a little bit about that when he gives the update on blockchain in a moment. Secondly, neck and neck by the look of things, you want to support the next generation of entrepreneurs who are innovating with blockchain and you want to make money doing so. We think that the entrepreneurs are the heroes of this journey. And we too find nothing better than giving capital to a world-class entrepreneur who understands breaking and new technologies and can really build software and products and services with them. And then you believe that a distributed and decentralized communities are important and should be supported. And this topic is one that we'll talk about more this afternoon. We'll have 4 of the world's leading Web3 projects, their founders speaking to us in the last segment of today. I know that's going to be several hours away, but whether you can stay non-stop from now till then, or whether you'll check back in later, we would highly recommend that you listen to Galaxy, Gravity, T54, and Compute Labs if you really want to understand not just what's the very leading edge of blockchain Web3 development, but also the overlap with AI, because all 4 of those projects are absolutely fantastic examples of the intersection of blockchain and AI. So thank you so much for taking the poll. Kim, we can take that down now. And without further ado, I'm going to ask Mitch Mishigian to come up. I'm going to just say a couple of words about Mitch, and then he will deliver our first substantive section. So Mitch is our partner in London. He has a lot of experience in investment banking through Morgan Stanley, but chose to write his own London School of Economic thesis around our industry a number of years ago, and has become quite a renowned thought leader in our space. Those of you that read our newsletter or listen to our podcasts have heard Mitch a number of times in the past. But his goal today is to bring you fully up to speed with our space. And that's a tough goal in just about 30 minutes. But he's going to take us through the investment strategies for blockchain and crypto. And this will lay the table for the GPs that will be coming up straight after. So we're about to have 3 of the world's leading general partners of venture capital firms, all from Europe, joining us. But Mitch is laying the table for them. So over to you, Mitch.
Great. Thanks, Matthew. And thanks, everyone, for joining today. We actually have a fantastic lineup of industry insiders, investors, founders. As Matthew said, my name is Mitch Mishiga. I'm a partner at Blockchain Co-Investors. And before we get into all those people, I just want to set the stage for blockchain. Specifically, we want to describe how blockchain is not a monolith, right? It's not a single asset class, but rather has 6 distinct asset classes within it. And each one has its own strategy, best practices, risk-return trade-offs with regards to investing. So that's what we're going to do now in just about 20, 25 minutes. We'll do a brief introduction on the investment strategies, and we'll get right into the main content and hear from the experts. Before I do that, I have to make our lawyers happy. Some of them who are on the line, I can see, we do want to make clear that none of this should be considered investment advice. While we do invest in many of the areas we're about to talk about, we do have funds. This presentation is a general overview. So it should not be construed as investment advice or a solicitation of any kind. This is purely for educational purposes and to have a bit of fun. So first, we're going to start extremely high level. I know many of you know the industry and blockchain technology, but we'll just talk about very briefly, what is it? Why should you care? What does it do? What our firm's investment thesis is? Then we're going to describe how we divide blockchain into 6 distinct asset classes, and go into each of them in our investment approach, but also other investment approaches out there in areas that we don't cover. And then finally, we're going to set the scene for today's market, right? So what's actually going on? You know, are we too late to the industry? Are we too early? Why should you be paying attention at all? So that's today's content for this presentation. So first, what is blockchain? Well, very briefly, definitionally, a blockchain is a decentralized ledger, a digital technology ledger that enables secure and transparent and tamper-resistant transactions across a distributed network. Okay, so what does that actually mean? Well, we think of blockchains as trust machines, and basically they allow you to interact in a peer-to-peer way across the internet. It may sound like a small thing, but this is actually a huge technological breakthrough. Until blockchains, all internet interaction was intermediated, meaning that there's always an entity between you and whatever you're trying to do. So think a bank and a payment system, right? The bank is facilitating that. You're not actually connecting directly. But also think messages online, right? If you're sending someone a WhatsApp message, there's Facebook sitting in between you. So blockchains allow you to make that direct connection on the internet. It's basically like handing someone cash, but in a digital way. And that small insight actually opens up enormous amounts of use cases from, you can see on the right there, payments, remittances, tokenization, digital identity and storage. And ultimately, our firm and what we believe, and many of the experts you'll see today believe, is that all transactions, all commercial interactions in a digital economy could ultimately be secured on top of blockchain infrastructure. So it's an absolutely enormous idea. And that's why for us at Blockchain Go Investors, we see blockchain's low-hanging fruit as applying as a financial infrastructure technology. So just as the internet digitalized communications and content, we see blockchain allowing for the digitalization of monies, commodities, and assets, at least at the beginning. We think that's the low-hanging fruit that's quite simple. And that with blockchain, we can have fully digital commerce and actually upgrade the world's financial infrastructure. And I just want to briefly comment on AI because we often get asked about artificial intelligence. So I want to spend a moment here. Today's internet is very insecure. So it doesn't have a system of identity, no native payments network. It's very concentrated, so single points of failure. And basically AI's rise, artificial intelligence's rise, is going to exacerbate these problems. It's only going to exaggerate them. So the ability of hacks and phishing attacks will, if they're not already, increase substantially. And their sophistication is just going to blow through the roof. So that's why we're very excited about the confluence of 3 major trends, and blockchain plays an absolutely critical, if not foundational, role in that confluence in an area we call digital finance. You can see on the right there, this is the interaction between fintech, blockchain, and AI. Fintech for us is a front-end technology. It started in the mid-2000s. This is, gave rise to financial applications that are easy to use. However, fintech platforms like, Venmo, Revolut, these are all front ends. So they have the appearance of instantaneous transactions, but the back end, it's not instantaneous at all. These banks are settling multiple days after through an archaic network. So this is where blockchain comes in. As I mentioned on previous slides, this is going to allow us to put all financial products in a truly digital peer-to-peer transactional way. So we think that all financial products will be transacted ultimately on blockchain-based rails. And that's going to be really important in an AI age where issues like digital compute, identity on the internet, and secure payments are going to be, even more important. So these trends are creating a digital financial world, and we think that having a fully upgraded financial infrastructure is absolutely critical, and that's the role that blockchain will play. So again, I think everyone knew a little about that, just wanted to touch on it briefly. So now what are the asset classes? If there's one slide to take away from this presentation, I think this is the one. So we'll pause right here just for a second. Blockchain has 6 distinct asset classes. So you hear blockchain all the time in the news, you hear Bitcoin, you hear cryptos, but blockchain is not a monolith. There's 6 distinct asset classes. This is how we think about it. I mean, you could even break it down into smaller subclasses, but to make it simple, we think about it as 6 distinct asset classes. So first, you can see we break it down here between private and public holdings. So this applies to both tokens and equities, which we'll talk about in a moment. But basically, private markets are the markets that are not accessible to retail investors. They're very liquid, typically riskier, and large information asymmetries. So that can make it very difficult for certain investors, but also is an opportunity for others. Within private, we also divide between early and mid and late stage because they have, fairly different characteristics. Early investments typically have little to no revenue, very high rate of failure, but also very high rate of return when they work out. Later stage investments typically generate revenue, maybe cash flow positive, and their risk starts to diminish and their valuations actually start to trend towards public market valuations. So now we have private, public, early, late within private, but most important characteristic of blockchain is tokens v blockchain equity. So this is really, really critical. We're going to dive deeper into this in the following slides. But essentially, tokens are a unit of account on a blockchain. So basically just the ledger of the blockchain tracking who has what. But they have a wide variety of use cases, wide variety of economic rights, wide variety of governance rights. But what's important from an investor perspective is that they have similar trajectories to equity in most cases. And what that means is that they also follow the early, mid, late public stage process. So very similarly, you have a venture-led seed round for tokens. They might do a pre-TGE round, and then they'll have their going public event where the token might get listed on a Coinbase. And that going public event we call the TGE event or the token generation event. So when you look at blockchain, again, you have to understand that the news, they don't always have it right. It's not one monolith. You can divide it public, private, early v late, and equity v token, and that actually yields 6 distinct asset classes that you can invest in. And each one, again, has a different risk return profile and different best practices. So that's what we're going to spend a bit more time on in the rest of the presentation. But before doing that, I want to just double click on that equity and token because it's a concept many of you might be still getting your heads around. For people in the industry, we don't totally have it figured out, particularly in terms of valuation. So most people know equity. You can see on the left there. This confers voting rights and right to economic gains in a corporate structure, typically a Delaware LLC within the US. It's fairly standardized, though, around the world, right? So if you buy equity in Europe or in Asia, you have similar rights. Tokens, on the other hand, are not so standardized, right? So again, it's a unit of account on a public ledger, but they're not really standardized at all. So sometimes they have economic rights, sometimes they don't. Sometimes they have voting rights, sometimes they have no governance rights. There's limited standardization, limited market norms, and very limited information disclosure at all oftentimes. So you can see here some of the applications of tokens. The first 4 are fairly intuitive as they pertain to products we have in the traditional financial world. And we're simply mapping these products on-chain. So these are basically forms of money on a blockchain. CBDCs are state-sanctioned currencies. Stable coins, these are private forms of fiat currencies. Crypto assets are cryptocurrency seeking to be money without a state or a private entity representing it. So this is where Bitcoin sits. Asset-backed are going to be tokens that represent an existing financial product. So something like tokenized equity, a tokenized money market. So those are pretty simple to get your heads around. So just taking traditional monies, commodities, and assets and putting them on chain, still a massive unlock. Beneath that, we have, let's call it new and innovative use cases for units of account. And these vary widely. We won't go into huge amounts of detail today. A lot of really interesting innovation happening in these sectors. One example would be utility tokens, which you see is the second one down there. These basically allow you to interact in a protocol. So you actually might need the token to use the product. A good example would be something like a decentralized storage protocol. There are several, one famous one's Filecoin. You actually need the Filecoin token to interact with the ecosystem to purchase the storage in the decentralized network. So it's quite an interesting idea. So look, suffice to say that tokens are incredibly interesting, but also very important area that investors need to take note of and also proceed with caution when accessing this ecosystem. Okay, so now we have the 6 distinct asset classes. What are the best practices? Well, so I'll just make a brief upfront comment that we specialize in 3 of these asset classes. So I'm going to keep my focus there. But just so you know, I will touch on the others. But later today, you're going to have experts from all of those other areas as well, who are going to cover things that we, are not experts in. But they're very important to know, and hopefully you'll learn a lot. The first is our broad strategy. So for us, this is how we think about accessing the ecosystem. We want to invest into digital finance, so we want to be very focused on the area that we know well. We're more focused on early stage technology investing. We tend to emphasize digital monies and assets and blockchain-based technologies. We're trying to secure very high quality coverage, be extremely diversified. I'll touch on that in just a minute. We want to co-invest with the best investors, many of whom you're going to hear from today. We then selectively follow on and take concentrated bets at later stages. So that's how we think about kind of early to late. And then very importantly, we invest through downturns. We've been through 3 bear market cycles now within crypto. Innovation never stops. You didn't want to stop investing in the internet in the early 2000s. And so the same goes for blockchain. And then being very disciplined about which valuations you enter into, and also keeping the cost structure of our vehicles low. So our institutional focus here is the early stage for equity and tokens and the mid stage for equity. So at the early stage, it's incredibly important to be diversified. And that's because there's a very high rate of failure. And we'll talk about that in the next slide. But for this, we choose a fund-of-funds strategy. So this is where we actually pick 20 venture capital funds. Again, many of them that you're going to hear from today. Those firms will each invest in about 20 companies, which creates a basket of something like 400. Within tokens, we have a little bit of exposure as well from the fund of funds, but we actually invest directly alongside top venture firms on the portfolio approach as well. Finally, we are also very focused on the mid stage and to a lesser extent, some later stage investing. Here we wait for companies to be de-risked and ultimately appear as emerging category leaders before taking more concentrating bets. So we're less focused on the public markets, however, as I said, but we'll give you some of the best practices there, as well as many of today's panelists are experts in that area. So one of the most important concepts to note is that venture capital investing typically follows power law returns. So this differs from other areas of investing which have normal distributions. So a normal distribution, this is that blue line that you see here. This is where most of the outcomes are average, and a very small number are exceptionally large or exceptionally small. So human height follows a normal distribution. In other words, most people are average height or near average, and a very small number are extremely tall or extremely short. Earthquakes follow the power law. So that's that pink line there. So, the pink line, you can see that the vast majority of earthquakes are going to be very, very tiny, so tiny that we can barely feel them. But a very small number of earthquakes are going to be exceptionally large, and those are very consequential. So you can see on the right-hand chart here that venture investing follows the power law. So this chart actually maps more than 20,000 financing within venture over a 10-year period. And you can see that 65% did not return capital. They actually, basically failed those investments. And a very small number, you can see as the numbers get very small there, return those 20, 30, or 50 X's. So the takeaway at the early stage is that a very small number of investments are going to drive your returns. It's a sort of a big return business. It's a one-hit wonder business. Hopefully more than one-hit wonder. That's why for us, we settled on a disciplined fund-to-fund approach to access the early stage. So rather than selecting one early stage investment that is 2/3 chance going to fail, we have a disciplined fund process where we select 20 venture capital firms. Each might invest in 20 underlying companies. That creates a portfolio of something like 400 companies, give or take. And throughout that process, we're filtering for size and performance and strategy and investment theme. And look, this is just our opinion, but we believe the best risk-adjusted return way to access the early stage is through diversification. And so for us, that ensures that we're able to capture at least some of those very large outcomes. When we do invest directly at the middle and later stages, we aim to follow a strict set of investment fundamentals. So the first is that we want to stay in what we're thematically aligned. We said it right up front. So digital finance, digitalization of assets, monies, and commodities. We want to invest with the best investors. So we want to, we're already partnered with all the best funds in that fund-to-fund portfolio. So we want to be investing in companies that they've backed earlier than us. At the middle and late stages, they have to have a compelling product, real revenue, customers, strong management teams, attractive return profiles, and ideally a path to liquidity that's well defined and to haven't broken too much regulatory red glass. So that's how we think about investing at those middle and later stages where we do take direct investments straight on the cap table. Now, as I said, we mainly focus on blockchain and private markets, but there is a large and growing public sector for blockchain, both in tokens and equity. And you're going to hear from several experts today in this regard. However, I do want to give you some of the best practices here as well. And then we'll touch on this in more detail later today. But in terms of public crypto or tokens, you have a few options. And the first on the left there is that you can just purchase them directly. So what's really unique about crypto is that you have the ability to self-custody. So you can actually go on, get a digital wallet, and hold and trade cryptocurrencies in a truly decentralized way. That's also fairly technical and carries its own risks. So unless you're very interested in, learning about the technology in a hands-on way, we would actually not recommend directly holding and trading crypto for first-timers. Rather, you can see in the center here some of the top exchanges, such as Coinbase, Kraken, and Uphold, some of whose CEOs will be joining us later today. And the exchanges in the space, these are really the brokerage firms for digital assets. So think Charles Schwab or Fidelity. These are the firms that will they'll approve tokens. They'll have a more curated list. They have some guardrails on. They have a number to call customer service. And then finally, if you want to take it a step further, there are pro trader platforms. There are liquid hedge funds. Kraken and Coinbase also have institutional offerings. SFOX has institutional offerings. So you can go even further if that's something that you're interested in. One other thing just to touch on is for those of you looking to access liquid crypto, I also just want to point out the rise of new spot ETFs. And so famously, these are now available for Bitcoin. They're also available for Ethereum. They're also available for a few others, or we expect they will be later this year. But basically, ETFs just give investors an equity-like experience, but allows you to get that public liquid crypto exposure. And again, we're going to be joined by Bitwise's CIO later today, so you're going to hear a lot more about this. Again, it's not something we do as a firm, but there are now a number of highly institutional Bitcoin ETFs out there that basically will let you purchase Bitcoin, in your normal equity trading account on Charles Schwab or Fidelity, whatever you use. Okay, so now you've heard about the 6 distinct asset classes, about what blockchain does, but why should you care today? Are you too late to the party? What's happening in the US? Well, I think here it's quite important to give a bit of historical context. And with that context, you can see that we're very early in the development of blockchain. So if you take the rise of the internet, which I've mapped there on the left, the internet did not just spring up in the mid-1990s, right? There had actually been 30 years of technical development, since ARPANET, first did the iteration of the internet in the 1960s, the first email sent in the 1970s. So the internet really did not commercialize in its first 30 years of development until you got to the web browsers. And that's when Netscape Navigators launched in 1994. And that allows everyday people to use the internet. It's not even really until the 2000s that you actually get what you could call internet native business models producing large amounts of cash, right? This is when the Googles and the Facebooks of the world start to monetize through their advertisement model. But that took a while to development. So now here we sit today, and it seems quite obvious. Of course, the internet was going to produce trillions of value, but it's been, nearly a 60 or 70-year journey. Bitcoin was just, the white paper was just published in 2008. So that's just a little over 16 years ago. The Ethereum white paper in 2013. So now we're about 15 years into blockchain's development. It's a multi-trillion-dollar asset class. It's hundreds of millions of users. It settles and facilitates trillions of dollars in payments every single year. So changing the financial system, this is a multi-decade conversation. And so we actually believe we're just right at the beginning, right? We're just 15 years in since the Bitcoin white paper. But also, I think you can say today that the writing's on the wall, and the direction that this technology is heading, you can kind of see the direction it's heading. And and in fact, over the last decade, you could say that it's really become a recognized part of the financial system with several applications with product market fit. The world's leading financial institutions, some of them you can see here from BlackRock, which has a tokenized money market. PayPal has a stable coin. Visa's in stable coins. They're all leaning into the sector. We have many killer apps you can see on the bottom right there. So the Bitcoin, Ethereum ETFs are the most successful in history. Stable coins are settling trillions on par with MasterCard and Visa. Tokenized money markets are now a multi-billion-dollar industry. So you can kind of see the writing on the wall. And at the same time, you can see on the top right there, and we'll talk about performance later in the presentation, Bitcoin's been basically the best performing asset class, and this asset class as a whole has been. So it's really a sector that I would argue you can't simply ignore anymore. If you're an investor out there, you really need to start looking at it because you can see the direction it's heading, the potential it has, see how early it is, but also, at this point, it does seem a bit de-risked in our opinion. And this is all, more the case given what's just happened in the US, which has been absolutely monumental. And again, we have the Blockchain Association, one of the leading lobbying groups coming on, advocacy groups. So we're going to have more details there. But basically, after the recent election in the US, if you look at the actual changes on the ground, they could not be more positive, right? So the US is establishing a strategic Bitcoin reserve. Changes at the SEC mean that many regulatory burdensome lawsuits have been removed on companies like Coinbase and Kraken. There are very serious bills in Congress to create a regulatory framework for stable coins and market structure. I mean, the setup for the industry could not be more positive in the US. And blockchain and digital assets have been progressing, without full participation from the US, which is the world's largest financial sector and largest capital market. So now the US is turning on, us at Blockchain Co-Investors, we could not be more excited. We think the setup could not be better for this industry. And then, so it's interesting that despite this lack of participation for the US, this asset class, from a purely returns perspective, has been, one of the best performing, in a very consistent way. Here you can see public equities and public liquid crypto. These are indexes released by Bitwise, again, who you hear from. So the returns have really outpaced other sectors by a wide margin. And you can also see that another way to look at it is Bitcoin, which is sort of like, the S&P 500, you could say, of the industry. And when you look at its returns mapped to other asset classes, it's really been the best performing asset class in 10 of the last 13 years. So now it has been the worst in 3 years as well. So it hasn't been without volatility. This is, as we said, an early nascent industry. It's its first 15 years. But, for me, one of the key takeaways here is that if you're a family office, if you're a wealth advisor, I mean, you need to get smart on this industry. It's not going away. The US is embracing it. There's a strategic reserve. Many other countries are likely to follow. And it's about to be solidified via a regulatory apparatus in the US, which is truly exciting. And so before I conclude, again, I just want to reiterate and show you more disclaimers. This has purely been for educational purposes only. Nothing here was construed as investment advice. And we're about to wrap up this presentation and move to our first fireside chat and start that main content. But before we go, again, I just want to reiterate, very important, 3 very important points, which is blockchain. This is an important infrastructure technology that we think has a critical role to play in today's financial system, right? So it's something you should pay attention to. There are 6 distinct asset classes. It's not a monolith. So when you're looking at this sector, you can't just look at the news and say crypto's down 10%, what's happened, right? Each asset class has a distinct risk return trade-off and best practices. And then finally, we're very early in its development. So, you're not too late. It's been de-risked, but we're only 15 years into a multi-decade conversation. The US is turning on. And with that, we couldn't be more excited as a firm and very happy to be where we are and how we're positioned. So with that, I will, I see Matthew's just joined. I will pass it back to you. And I think we're going to have another poll before the main content starts. So thank you very much.
Yeah, so Mitch, stay with me just for a minute. Very excited to see that our 3 general partners of venture capital firms are all with us. But just before we ask them to turn on their video and join us, There are a few questions, Mitch, and I think we are trying to do the questions at the end of each segment, and we've got a couple of minutes. So short answers, but do you want to pick off a few, and I can pick off a couple too and try and catch up with the Q&A? Why don't I go first?
Absolutely, I can do the
Okay.
first one. So I see someone said, so blockchain allows the back end to be natively digital. I mean, the short answer to that I would say is yes, that's exactly right. So you can think about a blockchain again as it's basically like a digital database, right? So it's just, you know, its most simplest form, you know, Bitcoin is just really keeping track of who has the Bitcoin. And so it allows you, it basically just can, you know, if I have 1 Bitcoin, you have 0, and I want to send it to you, it just switches and says, now I have 0, you have 1. And so it just does that, you know, and it's not written down anywhere. It's just all happening digitally. So the short answer is yes.
Let me pick off the two to do with our investment strategies. We have a question that asks, do we do public activity? And then there's one about what's our real bread and butter. And in a way, it's the same question. Just to keep this very, very simple, we think the world roughly breaks down to investors v traders. And if you're going to do private investing, you better be a very good venture and private equity investor. And it's a very unique skill set. And today you're going to hear from a dozen of the world's best general partners in early and mid-stage blockchain investing. And when they talk to you, I think you'll understand that they are really traditional venture capitalists, not only making investment decisions in the formation stage, but if it's tokens, there are a few wrinkles that they have to be experts in order to be investors in this particular industry. We think we have those skills. So we have been doing private investing for 25 years and more. We've chosen a fund of funds strategy in the early stage for very specific reasons, some of which Alison mentioned, some of which Mitch mentioned. But it's our belief that most venture is a local business, and the best deals go to the best investors, and you can't be everywhere. So our family offices and wealth advisors, many of you are with us right now, you know that you can place a single investment with us and we'll give you that global access in Berlin and London and in New York and in San Francisco and in Hong Kong and in Singapore. And a fund of fund allows that global diversified exposure. Now, public markets are quite different. A good trader is a good trader, and they know or think they know why price will go up or down in a relatively efficient, highly liquid public market. I'd be the first to say I don't know on any given day whether a price will go up or down. And so we as a firm do not actively trade public blockchain equities or tokens. So I think I answered those two questions together.
I can take one more. So I see, why might I hold the ETF instead of holding Bitcoin or Ethereum? So I think this is an interesting one. I think that the CIO from Bitwise will be on later and is going to give a much more detailed answer. They have an ETF, but I'll try to answer it as well. So the ETF, right, it would basically just be ease. So if you want to custody Bitcoin or Ethereum yourself, you have to deal with, you know, public-private keys. You know, so that may or may not be something that's interesting to you, but it's also creates a bit more of a burden. That also would be lower cost. So the ETFs are going to charge you costs, but it'll just, you know, you can just get that exposure. You could also just purchase it directly on an exchange, which again might be lower cost, but if you don't want to set up a new account or deal with something like that. And then finally, the other big reason I would say for ETFs would be, you know, that it could go into your retirement account, right? So for people out there who have, you know, RIAs or 401ks, you know, many of those ETFs are actually available in those, you know, because you have access to any ETF. And so where a lot of them, you know, it's still more difficult to get Bitcoin directly in them. So look, it's really just up to you, you know, sort of theoretically, you know, your exposure is the same. And most of the ETFs are pretty low cost anyway.
Fantastic. Well, thank you very much, Mitch. I see a couple of questions that I think we should actually have Lassie, Richard, and Jasha answer at the end of the next segment because they're global experts on some of those topics. So what I'd like to do now is say goodbye to Mitch. And then I want to ask the next poll, Kim, if you'd just pop it up. I already gave you the answers to poll number 1. So we would like you to answer this one. And as you've noted before, this is really easy to do. So would you mind just answering this question? What investment strategies do you currently use for your family office, for your wealth advisory firm? Would you just click on those that apply to you? We're doing this not just for our own interest, but also because the next set of speakers, Lassie, Richard, and Jasha, want to know who their audience is and how knowledgeable you already are. So I'm going to give this a moment or two just to ramp up. We have a large audience. I already said we appreciate that some of you are on mobile devices or driving. So we know you can't all answer these questions, but we'd appreciate if as many of you would as possible. And in a way, what I'm seeing reflects the way the world tends to think, which is most investors invest first and foremost in what's easy to access. And clearly, the public liquid tokens, beginning with Bitcoin, are very easy to access. They are, as Mitch explained, they are publicly traded liquid tokens. Anyone in the world today can get Bitcoin and Ethereum exposure, and 3/4 of you already have that. The next easiest thing to access are public equities, like Coinbase and Riot, and that's the second thing that most of you, or half of you roughly, have exposure to. And the unfortunate part of the world and how it works is that early stage venture and private investing is exceptionally hard to access. And even more so, you don't want to access most of it because most of it will fail, as Mitch already showed you in the power law of our space. So you have to invest with the world's best investors if you're going to move into the places where the returns are highest. And the returns are actually highest in early stage venture. Consistently, we've seen that for the last 30 years. Early stage venture capital has the highest asset class return over a long time frame, according to the people that track these things.